I just made $5 million. $5 million. That's $5 million the past month investing. As you can see, I have more than $100 million. Subscribe to my channel so I can teach you how to make millions.
Let me tell you about my day so far. Coffee in Paris, surfed the Maldives, took a little nap on Mount Kilimanjaro. Oh yeah, and I got digits from this Polish chick in Rio. And then I jumped back for the final quarter of the NBA Finals. Courtside, of course. And all that was before lunch. I could go on, but all I'm saying is, I'm standing on top of the world.
To fiercely compete against Nokia for 5G contracts. Pricing pressure could adversely affect Nokia's revenue and margin expansion plans. Pure play software and service vendors could undercut Nokia's diversified revenue stream plans during contract renewal periods. Now, when we look at the earnings per share, we could see it's in the positive range and slightly beat the expected earnings by 1, and we got the 14 and the expected and the 15 cents on the actual. And when you look at the volatility, low volatility stock, Rajiv Suri, the CEO, headquarters is in Espoo, Suma. 1865 it was founded, 103 employees. Nokia provides network infrastructure, technology, and software services. It operates through the following segments: ultra broadband networks, LP networks, and applications, and Nokia technologies. The ultra broadband network segment comprises mobile networks and fixed networks. The IP networks and applications segment compromising IP optical networks and applications and analytics. The Nokia technology segment focuses on advanced technology, development, and licensing. The company was founded in 1865 and is headquartered in Espoo, Finland. The listed name for NOK is Nokia Corporation. Smash that subscribe button, hit that like video, stay tuned for my next videos on Nokia. Let me know in the comments what you think about Nokia, and let me know what companies and stocks you guys want me to analyze. Thank you guys for watching and have a great day.
One thing about this company is that they've a certain proximity from the personification of redundant axioms presupposed upon tautological repetitions and enhance their paradoxical paradigms through redundant innovations. Warren Buffett, the billionaire investor, once said, "Be fearful when others are greedy, and be greedy when others are fearful," by billionaire Warren Buffett. And essentially what this means is, when traders are greedy, they'll keep on buying and driving the price up and thinking that it's going to keep on going up and up and up. But eventually what ends up happening is the stock ends up tumbling back down to earth from the moon because of greed. And people, that's how people lose a lot of money. And when Warren Buffett says be greedy when others are fearful, what he means is that When others are fearful because the stock plummets and everyone starts selling their stocks at a discount, that's the time you want to start buying companies. That's the right time to buy. But usually people start selling. People call it a crash, and that word crash scares people. Really? Let's change the definition. Instead of crash, let's call it a discount. That's essentially what it is. A discount. That's really what it's all about. So as we can see, the Fear and Greed Index by CNN, what emotion is driving the market right now? What emotion? Right now, the greed is driving the market right now. And the reason for that is, as we can see, the McKellen Volume Summarization Index measured advancing and declining volume on the New York Stock Exchange. During the last month, approximately 8.23% more of each day's volume has traded in advancing issues than in declining issues, pushing this indicator forward the upper end of its range for the last 2 years. And as we can see, the stock price strength, that was the breadth. With the stock price strength, the number of stocks hitting 52 weeks highs exceeds the number of hitting lows and is at the upper end of its range, indicating extreme greed. As we can see, that's why the market kept going back up and up. As we can see, it's in the greed territory. As we can look at the safe haven demand, the difference in 20-day stock and bond returns, stock have outperformed bonds by 2.92 percentage points during the last 20 trading days. This is close to the strongest performance of stocks relative to bonds in the past 2 years, and indicates investors and rotating with stocks from the relative safety of bonds. And when we look at the put and call options, the CBOE 5-day average, the put-call ratio during the last 5 trading days, volume and put options has lagged volume in call options by 36.82%, as investors make bullish bets in their portfolios. However, this is among the lowest levels of put buying seen during the last 2 years, indicating greed on the part of investors. And when we look at the market volatility, the VIX and its 50-day moving average, the CBOE Volatility Index is at 15.72. This is neutral reading and indicates the market risks appears low. And when we look at the junk bond market, the yield spread between junk bonds versus investment grades, investors in low quality junk bonds are accepting 1.74 percentage points in additional yield over safer investment grade corporate bonds. This spread is much higher than what has been typical during the last 2 years and indicates that investors are highly risk averse. When we look at the market momentum, the